What's up everybody? Welcome to the Stocks channel. My name is Corey and today we had a mixed bag in the stock market with most of the indices closing in the red but the Dow Jones closing in the green. Are the bears and sellers starting to get exhausted near support? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So today in SPY we were down 0.76% and we are still closing above this very critical level at 393. And remember, above 393, it's more likely we're getting the counter trend rally sooner rather than later. And below 393, we are more than likely going for that next leg lower. So you could see intraday we were selling off, but we did see buyers stepping in yet again. And you're starting to see a lot of lower wicks on these candles, which is telling you there are buyers down here at these levels. Now, obviously, we are still in the downtrend and we have not yet broken above that resistance right around 397. So the next time SPY breaks out will be a decisive close above about 398 to 400. From there, we'll likely start seeing a counter trend rally that should take us up to at least 408, but more than likely 420. And we will have a lot of bears sitting at 420 and 430. So in the short term, it's very difficult to be bearish sitting so close to this support zone, knowing that we're very close to a counter trend rally, because historically speaking, the stock market has never sold off for 9 consecutive weeks. And even though that doesn't guarantee it can't happen, it is very unlikely, and statistically the odds are very low. So you should not be expecting to see much more downside without some type of lower high or counter trend rally. So just be very cautious getting overly bearish while SPY is above 393, because we need to break down below 385 to get that next leg lower. And that next leg lower will be down here at 376 and 370. On the NASDAQ 100 triple Qs, we were down 2.13% today, and we still see the tech sector looking relatively weak with the strong bear trend and still sitting down here around the support zone right around 285. The triple Qs need a decisive breakout above 303 and 306 to get the counter trend rally, which will likely take us to 318 or 330. And there will be a lot of bears at those levels as long as we have the downtrend. And as long as the bears have control of this market, they're not going to roll over and die easily. On a breakdown below about 285, you're looking for the next leg lower at 276.8. And below that, the next price target is 269.5. And all of these are valid price targets as long as we have the bear trend. In the Dow Jones, we were green today, going up 0.17% today, and we're right next to that resistance trend line, and we're now 2 days in a row closing back over the 5 EMA, and the 5 EMA is now positive sloping. So we are seeing some relative strength in the Dow Jones as we continue to climb for 2 consecutive days, and we are bouncing off of that price target down here at 308. So in the Dow Jones, you want to be a lot more bullish if we do start to break out above the 320s, because that will likely break the downtrend in the short term and take us back up to retest the 20 simple moving average right around 325 to 326. Above 326, it'll look like a bullish breakout that could take us back up to critical resistance at 333 and 340. And there will be a lot of bears waiting at that upside resistance. So don't just assume the bears are going to roll over and give up without a fight. On a breakdown below 308, the next leg lower would take us all the way down to 297. So you will want to get a lot more cautious if we start getting back into the support zone right around 310 to 308. On the Russell 2000 IWM ETF, we were down just about 1.5%, and we did close back below all the moving averages, and we are back below 178, and we still do have the bear trend. So from here, we'll likely continue to trend lower if we don't get back over that resistance soon, and the next likely price target will be a closing of the gap at 165.7, or breaking through that support and going down there to 156, which is still a valid downside price target. Remember, as long as we have the bear trend, we have price targets to the downside that we will want to pay attention to until we lose the bear trend and we see bullish price action breakouts. Bullish price action breakout in IWM is going to be a close above 183 and then a close back over the 190s. So still respect the downtrend and the likelihood that we could continue to trend lower until we get that bullish price action. On the Arkk ETF, we were down nearly 7% today, and we did fully close that gap right around 39. So if we continue to go lower, we're likely going to get that full measured move lower to retest the lows at 35. Or hit our price target at 33.7. This is a very strong bear market, so there's absolutely no reason to be bullish on this stock. So do not get bullish until we get all the way back above 52 and start seeing higher highs and higher lows. On the way higher, you're looking for resistance at $40, $44, and $47. On the VIX, we were up 3.4%, and we see the VIX is still struggling to close back above 30, and we continue to see wicks on the upper side of the candles on the VIX. This is exactly what we would want to see if the stock market is putting in a local bottom before a counter trend rally, because if the VIX starts spiking out above 30 and we get to that price target at 38, we are more than likely going to get that next leg lower and hit those downside price targets. But right now, we're just not seeing that on the VIX, and the VIX continues to get crushed when it tries to break out above 30. and we are putting in lower highs, but we are also putting in higher lows. So the VIX breaking down below 25 and 24 will be a bullish signal, and right now it looks like the VIX is just consolidating right around 30. On Bitcoin, we're currently up about 1.4%, trading right around 29,000, and we're still sitting above that support zone at 28,000, building that strong foundation of support, which is likely going to send Bitcoin to that next leg higher, which will be at 37,000. If we can break above 37,000, you're looking for a retest of the resistance trend line at 40,000, and a breakout above 40,000 will be a bullish breakout. However, if Bitcoin fails at support at 28,000, you're looking for a retest of this low at 25,000. And if we break below 25,000, you're looking for a retest of support at 20,000. So while we have this bear flag look and a downtrend, it is a real possibility that we could break down through support. Even though I don't believe that will happen, the stock market doesn't care what I think, and it's still possible that we come down to 20,000. So the price action breakdown you're looking for is below 28,000 and then below 25,000 to be getting more bearish in Bitcoin. But as long as we are holding this support, it does show there are buyers at this level and we could get a rally from here. On NVIDIA stock, we were down 4.4% today, and we did close near the previous low right around 161. And we're very close to getting to that price target before earnings at 150, and we have earnings coming in tomorrow. So we're going to see earnings be a very large catalyst in either direction, and more than likely a lot of the bad news is already priced into the stock, so I do think we are very close to a bottom. If we do get to 150 and we start to bounce, we'll be looking for bullish breakouts above 179, 199, and we'll be a lot more bullish above 210. However, if we break below 150, there still is a strong support down there at 125. So with earnings, I never suggest gambling, so we could go either direction, and you're much better off to just wait until after earnings and then see where price action goes. On Tesla stock, we were down nearly 7% today, and we did hit that downside support zone at 620, and so far it is holding up, but we still have a very strong bear trend, which means we can continue to go lower. If we break down below 620, you're looking for a test of right around 600. But as you can tell, this is a very strong bear market. So if we do lose this last leg of support, you are looking for much lower prices and you need to be very risk off. Upside resistance at this point will be 700, 762, and the 20 simple moving average at 791. On Apple stock, we were down 1.92% as Apple did retest that support intraday at 137, and so far it did bounce, but we are still below all the moving averages with the price action, and we still do have a strong bear trend. So if we lose support at 137, you're looking for support at 134 and the price target at 130. Bullish breakouts at this point are getting back over 144, 150, and 156, and above 156 we will lose the bear trend. This is a downtrend until it's not, and this was more than likely just a dead cat bounce in Apple, so we could still continue to go lower and hit that price target at 130 if we don't get a bullish breakout in the very near future. On the financial sector, we were down 0.21%, and the financial sector did close back above the 5 and the 13 EMA, and we're very close to trying to attempt to break out above the negatively sloping 20 simple moving average. So above the 20 simple moving average will be a bullish breakout, so watch for that very closely. Otherwise, you're looking for a breakdown of this strong support zone that has been holding up for another leg lower. If the financial sector gets a bullish breakout, that will be very bullish for the S&P 500. The industrial sector was flat on the day, going absolutely nowhere, still closing below all the moving averages and still in a very strong bear trend. The healthcare sector was up 0.3% today, closing back over the 20 simple moving average for the second day in a row and now 3 closes above this level. So we are very likely going to test the 50 EMA, and it will be a bullish breakout if we do close above that level. The healthcare sector has snapped the bear trend, so this is definitely a bullish development for the S&P 500. The energy sector was up 0.38%, closing at another 52-week closing high, and we still do have the very strong bull trend, so the energy sector could still continue to go higher from here. But I will caution you that this price action is getting very choppy, and we could be reaching a very important pivot where we do see a correction in energy, so make sure you're watching support very closely. So jumping back over to the S&P 500, we are getting very close to knowing if we are going for the next leg lower, getting the counter trend rally, so watch this very critical level at 393 on SPY. Above 393, it's more likely we're getting the counter trend rally sooner rather than later. And below 393, you need to watch for the next breakdown to the next leg lower. These are downtrends until they're not, so use great risk management and make sure you're not doing anything too risky in a downtrend, like trying to swing trade long positions with no risk management, because that is going to wipe you out. Respect the fact that we're in a strong downtrend and don't get overly bearish as we get into support, because this market could be very due for a counter trend rally. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank Trade Alerts beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel and Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.